Thanks. Ending the day in the red, but the KRE index closed out a strong week, up nearly 3%. Performance is stronger if you take a look at the 1-month chart, up 16%. So, are the regionals finally out of the woods? Let's bring in Bob Elliott from Unlimited Funds. Bob, the KRE fell to around 44, 45 bucks a share back in March when people were initially freaking out. Then it fell even lower than that to the mid-30s. We're just now back to the initial freakout level. So how bad or cloudy is the outlook for the banks, or are they priced at a discount, you think?
Well, the regional banks have mostly survived this challenge to them. I think the main question was whether or not this was going to be a broad systemic issue with a lot of different banks experiencing bank runs, or was it going to be a bit more narrow to a couple of those more poorly run banks that we are all familiar with? And I think over time, the data continues to emerge that the banks, basically, most of the regional banks and the smaller banks are run pretty well, are relatively profitable, and they're able to withstand the type of economic pressures that they're seeing. And it was really pretty concentrated in a smaller subset. Now, it doesn't mean the stocks are going to go on a rip from here, but they're probably they certainly were a bit oversold relative to the economic situation that they were facing.
But are they still, is what I'm wondering, especially because you've still got the commercial real estate issues lurking out there. And there was talk that there was going to have to be consolidation in the regional bank space just because of the capital required and a certain amount of scale required. And there's so many small ones. Is that still an overhang?
Well, the commercial real estate situation, I think a lot of people at the height of the concerns really wanted to bring that up. But anyone who's been through a banking cycle knows that it takes forever for those sorts of things to play out. It'll be 10 years before the entirety of the commercial real estate problem gets addressed and dealt with, and we'll be long past thinking about regional banks at that point. They've got plenty of NIM earning potential. They have plenty of earnings capacity to absorb those commercial real estate exposures. And the frank reality is the vast majority of those commercial real estate exposures are actually in things that aren't sort of traditional glitzy New York office space. It's in warehouses and manufacturing facilities that are actually doing pretty well. And so you put that all together, I think we're probably seeing these banks still trade at a significant discount relative to their earning potential over time. Frankly, now that the bank run concern is by and large gone.
So are these bank deposit numbers important to you?
Oh, they certainly are. I mean, we're looking at them every week, every Friday. It's hang out with you, John, on the TV and look at some bank deposit numbers. And so we'll get those in a few minutes. But you're basically looking at, are we seeing bank runs or are we seeing bank walks among the big banks, which mostly what we're seeing is sort of a slow move of bank deposits away from lower yielding deposits and into money market funds, but it's very slow moving. And then you look at the small banks and you see whether you see meaningful pressure there. And honestly, this used to be pretty exciting, but it's been pretty quiet for the last 6 or 8 weeks when we've gotten those numbers. Pretty stable when it comes to the bank deposit data that we're seeing.